And how's it going, guys? This is I7 here, and today I just wanted to talk about trading psychology. Now, I've been going through some trading content at the moment with a little bit of shorts there. I want to do more trading content for the future because I feel like that's where my head is at right now. I will create other content towards the end of the year, but I'm really focusing on trading at the moment. So yeah, so now let's get into it. Like, since I've started trading and all of that, I feel like you can learn as much as you want to learn, but if your trading psychology is not at that level, you will end up being a losing trader, even if you know everything. Because in the market, you know that there's two types of traders: the ones that knows too much and can't place trades, and then one that knows too little, but their trading psychology is so good that even when they get that trade, they either hold it or they go in with whatever leverage they use, take the money they want to take, and then they're out. So, once you know so much information about how the market works, how you can profit from it, and it becomes easier. But now, if you do not work on your psychology, then it becomes very, very difficult for you to become profitable, because of the fact that you have worked on the technical aspect, you've worked on the fundamental aspect, but you didn't work on the most important aspect, which is your mind. And when you work on your mind first, before going for the lavish things that you see on social media, on these social media platforms, it becomes very difficult, because now you're chasing other people's accounts. You don't even know how much these other people make, or you don't even know how much these people have in their accounts, for them to make the money that they're making. And you coming in, probably you coming in with like maybe $10, $20, $100, which is $100 is okay. $1,000 is great. You can start, with proper risk management, you can aim for 10% and then you can make a lot of money. But not a lot of people don't have that amount. A lot of us come in with about $10, $20, $100. Even though $100 is pretty much a good amount to start with, but sometimes a few mistakes and then your account is gone, depending on the leverage that you use. And it's something that you need to be mindful of. But if you're coming in with like a $10 account, the room for error is very, very, very small. So you need to have so much knowledge in what you're trying to do and how you're going to do it. Have your entry points, have your exit points. Know this: when the market's like this, I'm going in. When the market's like this, I'm going out. You know what I mean? And you need to play in the time frames of about 1 to 5 minutes. Yes, you can do a top-down analysis from the higher time frames down to the lower time frames, knowing the overall trend of the market. But if you do not execute in the 1 minute or in the 5 minute time frames, you end up having a bigger drawdown, and that will give you a lot more risk of you losing your account. Because I've done this a lot. And I can analyze in the daily, in the monthly, in the weekly, and then go to the hourly, or in the 4 hour, or go to the hourly and take my trades in the 15 minute, which it's all good. Sometimes I should take my trade in the 1 minute, in the 1 hour. But the only problem with that, as soon as I place my trade, once it goes into drawdown, I'm already half my account. If you're $10, it's already like $5 already gone without you even doing anything. So then I realized, let me just go down to these smaller time frames, like the 1 minute. Even though I know that once it starts moving, the money is a little bit small, but if you hold it for a little bit longer, then you can make a lot of money. But that's where the trading psychology comes to play, because now your psychology is being tested a lot. Because in the 1 minute, things move fast, things move very quickly, and what could be profits in 1 minute, in the other minute could be losses, you know what I mean? And you do not want to hold any losses in the forex market, no matter how small your account is or no matter how big your account is. So what I normally do is, once it's in profit, you protect. If the market goes further, I can place a TP. But normally, sometimes the market doesn't get to your TP, so you need to be careful of that. Once the market goes into some decent amount of profits and then you come out, that doesn't mean that it exempts you from losing, because you're gonna lose at some point in the market. Everyone loses, but if you focus more on the winning trades and you focus less on the losing trades, then you become profitable. The reason why a lot of people, like myself, I've been there. The reason why I used to lose is because I used to close my profits early and hold losses, thinking that the market's going to turn and move back into the direction that in the direction that I expected the market to go when I analyzed it in the higher time frames, which it does. But sometimes, normally, it comes to your stop loss before it goes into those profits, and which is sometimes sad because you might take an entry that is just maybe a few pips earlier than you should have, and now the market goes into drawdown, goes into your stop loss, and once it goes into your stop loss, then now you're afraid to go in because you've just lost the trade. And this is where I personally made the mistake. Sometimes putting a stop loss there and putting a buy limit or a sell limit at your stop loss could help you if the market turns in that area and goes and shoots up to the moon or shoots down. You know that you're always ready for it, but that doesn't work all the time, so be careful with that. But I feel like that works for me, because sometimes normally it just goes to a stop loss, takes it out, and then just shoots back down or shoots up, where the market is heading. And that's what helps me a lot. And yes, I do lose some trades sometimes, but I always minimize my losses. If I have a buy stop at my SL, then I know it's at least 10 pips after that stop loss. After that stop loss has been put, I know I can put it there, and if it goes there, then I know the market is going into that direction, and I just have to let it go. Sometimes you do have to let it go, because you can analyze and then say the market's going up and then it ends up going down, because the market is forever changing. So even if your analysis is great, the market can decide to turn at any point and at any time. So you can't really rest your laurels on your analysis. You must always be able to move with the market when it turns and when it doesn't. So it's just a first video of trading psychology. I just want to get more into this, and if you guys have any thoughts, just leave them in the comments down below, and I'm sure to do another video in a series where I'm talking about trading psychology and trading in general. Anyway, this has been i7tech. Thank you guys for watching. Make sure to like, subscribe, and press that bell so you can stay notified with the latest videos in the channel. With that being said, I'm i7tech, and I'll see you guys in the next one.